A very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be continuing to work with the Hull moving average, which is a fast and smooth moving average, and it helps us determine the trend of the underlying instrument. And here we are utilizing the combination of it on different time frames. One is of 15, whereas the another is of 50. So we will see how we can proceed. We have already developed the underlying basic framework, and also we have almost built on the buy side. We have to finish the some variables, and then we will move on to the sell side. We are also using the min max and the ATR. Before we get started for the day, this is a standard disclaimer. Here I would like to remind that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing for many months, maybe even years, and also run it on the demo account. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we go back to chart to see what we will need to do in today's session. We are focusing on the sell side, and the requirement for the sell side is going to be that the last hour's candle close should be below the 50 HMA. So here the condition is fulfilled, but at the same time last 3 hours maxima value should be above the HMA. So for that we need to go back somewhere here, and as you can see the last hour's candle close is, for these are the 16 GMT, the candle close is below 50 HMA, but for 17 GMT the candle close is actually above the 50 HMA. So here we will have to see this difference, but the underlying idea is that we want the close to have happened below, whereas the last 3 hours maximum value should be above this 50 HMA. That means that this is the just the start, and these are initial hours. That's why we are putting in this condition. And then we also pay attention to the formation on the 15 HMA. So we want, earlier the HMA should have been rising, and then now it should start to fall. So we are basically looking at the curve here, and for that we are utilizing the combination of 3 HMAs on different look back periods. One is of 1, and then it will be compared to the value of HMA 15 3 hours back, and that value will also be compared to the HMA 15 of 5 hours back, and then we will take a decision there. So it should start to fall, the HMA 15, after having been rising earlier. And as I said, we want the candle close to have happened below this 50 HMA, and the maxima condition is also there. So with that, and one more thing is, and quite important one, is that the volatility should be good enough, and for that we are bringing in this difference of maxima and minima value, and we will be comparing it to the daily ATR range to make sure that there is enough of volatility when we are trying to get involved on the sell side trade. And also we are putting in the requirement, the pending open order, where we will be placing the order above the current price. So for that we will be using the sell limit order, and it will be a pending order valid for 2 hours, and for that we will do the calculations, which is going to be 20% of ATR from the current tick price. So we will do the addition on that count. Now let us see what we have done so far. At my place it has started to rain heavily, and so it has gotten a bit dark here. And let's moving on to our development. So here we have done the instrument subscription. The instrument of choice is Euro USD. Position amount defined at 0. Then we got these all moving average blocks. As you can see, shift 1, 3, 5, and then these 50. All these three are of 15. So note the difference here. And we got these historical candle block. Time frame is hourly, shift 1. Min max block for data on last 180 minutes, 3 hours. ATR for determining the optimum entry exit. Then these are all calculations block. Here the sell entry, this is buy entry, and as I said, we will be adding to the current tick price for the sell order. For the buy order, we subtracted from the current tick price. Then these are 1 minute candles, and we will be using this to help us define the exact entry and the exit point. These are calculation, as I said, to help us determine the volatility of the underlying instrument, and then we will be comparing it to the certain percentage point of the daily ATR. And as you can see here, we have our variables, users variables, and the value of this ADP is 40%. So we will want the volatility to have been at least 40% of the ATR. Now we have done this calculation for the stop loss. In today's session, we will need to do the calculation for the target price and order validity time, and then we will be almost done with the buy side setup. Here, these are the if conditions which needs to be put in place for any successful execution of the buy side trade, and we have defined these conditions. Now let us start with creation of the target price variable, and then the good till time, the order validity. So here we create a fresh variable, we name it target price. Start value will be the result of the calculation, it is of type integer. Okay, so we save it, we have created a very fresh variable here. Now we want to do the calculation. For that, we have to bring in the calculation expression, one for the target price and another for the order validity time. So here we put them in place. And another will be placed here. Now to create the target price levels, we are simply using the ratio of 1:2 for the stop loss and the target price. So here we have the stop loss, which is 20% of the daily ATR. So you can see this variable, we are multiplying the ATR by 0.20 to get 20% of the ATR value, and we will be utilizing the ratio of at least 1:2. I think we can go to the extent of 50% of the daily ATR. So we create a fresh variable here, and it is of double type, and we name it TPP. Okay, and it will be 0.50, and we bring in this variable here, and we also need to bring in the daily ATR value. So here it is. Line 22, A1 into A2, and we need to get this type conversion factor, and type conversion factor is 10 raised to the power 4, 10,000. All right, so it is going to be a1 into a2 into a3. And here we have this variable target price, which is going to be the result of this calculation. And now next is the calculation for the order validity time, and for that we have to consider the current tick time, on tick, last tick, and last tick time. So we got this. Now in 1 hour there are 3.6 million ticks, so we have to create a fresh variable t, and it will have the value of 3.6 million. So count the zeros well. If you miss out on it, then the whole calculation will go astray. And as far as I see, it is correct. So pay attention. It should be 3.6 million. And then it is for 1 hour, and since we are going to keep the order validity for 2 hours, we need to again multiply it by 2. And why we are doing separately is because suppose if you want to use it for 1.5 hours, then you can do it that way. If you want to keep it open for 3 hours, then you can simply change the value here and you will have the different order validity. So that's why we are doing it, and the value is 2 hours. So here we get this, and now all we have to do is a1 plus a2 into a3, and this is going to be the result of the calculation. And here we create a fresh variable for order validity. It is in long format, long Java type, data type in Java language. It is going to be OVT. We have created a fresh variable and its value is going to be derived from this calculation which we have done in this calculation expression. So it's time now to join the flow. We have done most of the much needed calculations. Suppose if you feel anything is missing, you can point it out by simply posting it on the comment section. So here we have in place the buy side now. Now is the time to move on to the construction of the sell side. For that we are going to need the if blocks. Let us take a couple of if blocks, and with that we have to put in place the conditions. First condition is that there should be enough of volatility. You can place the condition any way you like, just we have to make sure that all conditions are in place. The sequence of the condition doesn't really matter. So we start with the HMA 15 block, and we want the HMA 15 to be lower than the HMA 16. So this is shift 1 and this is shift 3, and it should be lower than the HMA 16. That means the HMA values have now started to fall. And the way we determine whether it is just a start or it has been falling for quite a while now, by comparing the HMA 16 to the HMA 17. Earlier it should have been rising, that's why we want HMA 16 to be above or higher than HMA 17. HMA 15 to be less than HMA 16, and HMA 16 needs to be greater than HMA 17. So here it is. And we have to move on to now HMA 18, which is defined on the hourly time frame for 50 hours. So we have to see if last hour's closing level was below the HMA 18. So for that matter, we have to look at the candle 19's closing level, auto created variable. Candle 19, its closing level, it should be below HMA 18. So again we get a couple of if blocks, and here it is. The condition needs to be HMA 19 close below HMA 18. Okay, yes. Now we consider again the HMA 18, and this time we compare it to the maxima level, and as I said earlier, the maxima of last 3 hours ask high value should be above the HMA 18. So we join the flow, first input greater than second input. Alright, everything is in place now. So we have defined this, and one more thing which we need to do is to look at the difference between the minima and the maximum conditions, and for that we have to take into account the calculation which we have done here, subtracting minima 20 from maxima 21, and it should be greater than the calculation we have done here. ATR difference stands as AD, and we take one more if block. We will need couple of if blocks for that matter, so we take that, and min max difference needs to be greater than the ATR difference. So we have these conditions. Now we place these blocks which we have defined so far on the cell side, and both the sides, the buy side as well as the sell side, should be symmetrical in the build. and we have to make sure that all the conditions are symmetrical. It's not exactly required. Sometimes you can make some changes, but if the logic is sound, I think you will want it to be symmetrical because it should work both ways, and any good idea will work both ways. So that's why we often insist that it should be symmetrical. Otherwise, you're always free to build anything as per your requirement, as per your understanding. But this is what a sound logical algorithm will look like. It will be symmetrical for both sides, and nature also loves symmetry, as you can observe in many of the nature's creations. And of course we are not going to delve too deeper in that. And now here it is almost done. So here we have 5 conditions in place, and on the buy side we had needed 7 conditions, and last two conditions are of the 1 minute closing levels, which need to be compared with the last 1 hour's closing level. So we add those two conditions, and then we are done. We will be all set for testing, and we will carry out the tests. So again, we have to take into account the closing levels of candle 26 and candle 27, which are last minutes and the prior minutes closing levels, sorry, 1 minute candle. So here we take candle 27 and candle 26 closing level. So here it is, candle 26 closing level and candle 27. Okay, and there is only one more historical candle which we are using in this setup, which is candle 19, which is hourly candle close, and this is needed for our comparison. So here we got this candle 19's closing level. So here I will show you candle 19 is 1 hourly candle defined for last hour. So here we now have this system in place, and the candle 27 should be below the last hour's closing level. That means it should be below the candle 19, whereas candle 26 should have closed higher than the candle 19. So here first input greater than second input, and then we get the pending open order on the sell limit. And here we have got it in place. It should be below the candle 19's closing. Okay, so we have defined all these if conditions. Now is the time to fill in the values for this pending open order, and we have already done most of the calculations, almost all the calculations, and all the variables are pretty much ready. This is the sale entry price, which is going to be 20% of the 80 daily ATR above the last tick price, We are going in with a lot amount of 0.1 million. Default instrument, we have done the instrument subscription for that. Slippage is going to be 2 pips. For stop loss and take profit, we have done the calculations already, and we will be taking those variables which we have defined. So here we take stop loss in place of SL, and this TP comes in here, and OVT comes in for good till time. So our whole setup is now ready to go to trial. We will give it a trial by fire. We will test it to see if it is up to the mark or not. And as you are most probably aware, we can't really test it for long time because of the constraints of time. So maybe we will test it for a week or at the max for a month, and then I will leave it to you to do the extensive testing to see how it is performing or if it needs further optimization. So that part will needs to be decided by you. This is the bare bones structure here. Now stop loss, target price, order validity, all three done. It's time to save the file and export the file to the Visual J Forex platform. Save draft. Okay, we started working on this on 30th of June, so its name is June 30th, and now we export the file. We will need to create a fresh folder here. This is a new start, new month, and this algorithm is going to be the first algorithm of this month 2020. So we create a fresh folder which is going to be named as Joule. We save this and we head back to the Visual J Forex that file from this section, and we have to import that file here, and then we carry out the testing. So here it is, our file june30th.java, and we first have to compile it. This is the code, the source code. It's not much long, 940 lines, and we compile the code. Compiling. Okay, compilation successful. That means it can be executed by the platform. Now we test it. Account. Okay, that's fine. The instrument will need to be changed as we are testing it on Euro USD. Previous month. Okay, we keep as it is, and we carry out the test. And during the test you might not hear me properly as it takes a lot of CPU capacity. So here we go. Here you might have seen there was an order which then got cancelled and it didn't really during the refund time frame of 2 hours. Now fairly fast, but still I'm not really sure if we will be able to complete the whole month's testing. Maybe we will call it off after a. Oh, okay. New report executed, and again, first it went in profit and then it went in loss. So both the times we are not having much luck here. One more loss. The four trades so far have ended up in loss. So we will have to see what kind of results we get for this month and many more months. And if needed, we will need to do further optimization. We will have to change the parameters to make sure that we get involved during the opportune times. It is taking, okay, it has started. So we will test it for one more month and then we will stop the test. Oh, it seems it has slowed down to some extent. Alright, it's back. And this is not going well for us. So all the trades which have been executed by the algorithm so far have ended up in loss. One more. Oh. So we stop the test here and we have suffered quite a bit of loss, and you can say that this particular algorithm is not exactly looking promising, and then we will need to carry out further testing also to make sure that the results hold well on the longer time frame for longer duration. Then we will get fair bit of idea, but so far the test results are not really promising. So we will have to think on it, and maybe in next session we will do the further optimization by bringing in another instrument in combination with the hull moving average. So that's it for the day. See you tomorrow. Have a fabulous day ahead. Goodbye. Thank you for joining in.